Welcome to the latest edition of Fitch's Virtual Investor Series. I'm Rui Pereira, the Global Head of Structured Finance, and today I'm joined by Ben McCarthy, a Managing Director in Structured Finance for our APAC region. Today we're going to discuss Australia Structured Finance. So let's jump right into it. Ben, give us an update on performance.
Well, performance, as our viewers would know, performance coming out of COVID or through COVID has been the best we've seen ever. So in over 20 years, all our indices for both ABS and RMBS in Australia are actually better than we've ever seen. As we get into first quarter, we're just seeing to start to tick up for the first time.
Okay. And what's the outlook for the remainder of the year?
The outlook generally is deteriorating, and we have that across all asset classes for Australia. And the point there is that as we've seen interest rates rise so rapidly, we're starting to come into the point where, as I said, we're starting to see the come through in performance. But we are also projecting a deterioration in the economic profile for Australia. So economic growth is likely to fall and unemployment is likely to rise. But unemployment is actually still very close to the record lows for the last 40 years. It's around 3.5%. So we're expecting it to go up to 4.2% maybe by the end of the year. And you're going to see that in our consumer portfolios, but we expect arrears to still remain well within our expectations and well within where they've historically been.
Okay. And what other things should investors watch out for?
There's quite a few things to look at, a lot going on at the moment. So obviously interest rates have risen very rapidly. One thing is interest rates, if they're going to continue to rise. Rising unemployment is going to be the key, and how quickly it moves. We don't necessarily look at the absolute value, but how quickly it changes is being significant. Early stage arrears, so obviously when you start to see the arrears, we're expecting late stage arrears actually to get wider as well. But that's more because it's going to take longer to sell properties if we get into a rising unemployment situation. But the early stage arrears tell us things are starting to go wrong. The other thing, we're seeing changing payment rates. So payment rates are very high at the moment. We expect as people start to struggle in the economy, those payment rates will come down. And also there's a changing in lending standards is something we're really looking towards to see if that's going to come through.
Great. Thank you for your insights, Ben, and thank you for joining us. For more information on Australia Structured Finance, please visit fitchratings.com. And if you have any questions on the topics that we discussed, please send an email to the address on the screen. Thank you all for watching.